Well, for the second time this year, the Bank of Canada stuck to their word and they paused interest rates. But that doesn't mean there's no news. There actually is some news to come out of today's events. So I'm going to talk about who this impacts, what this means for you, and more importantly, what to expect going forward into 2023 and 2024. Hey guys, it's Alex McFadden at Flow Mortgage Company, your wealth expert. I'm focused on helping you create wealth in real estate and keeping you up to date. So let's talk about what happened today with the Bank of Canada. Well, on this specific day, the Bank of Canada has decided to keep the interest rates exactly as they are. They've decided to continue to pause. This is welcome news for those who are already feeling the pinch from interest rates having increased 4% over the course of the previous 12 months up until February of 2023. Now, again, what this means is that if you have a variable rate mortgage or a line of credit, your payments will no longer change and you won't be paying any additional interest. Again, a welcome sign for many families who are feeling the pinch from the last couple of years. Looking forward, the question is, how does this impact fixed interest rates, but most importantly, variable rate holders? And what choices do I have if I have a variable rate and I am feeling the pinch? So let's start off with what your choices are. If you have a variable rate mortgage and you're feeling the pinch, you have a few different options. Number one, you can of course stay the course and work on your budget. The advantage of doing so is that, well, it's possible we'll see interest rates come down, you will have held the course, there wouldn't have been a cost incurred, and you'll obviously go down as interest rates do. The advantage of doing so is that by not only will you not have any costs incurred by trying to refinance or lock in at higher interest rates, but as the interest rates go down, you will also see your payment or your interest component go down with it. Now, if you're coming up for a renewal in the next 6 to 12 months, that decision becomes more difficult. Do I look at a fixed rate or a variable rate, and over what length of time? Most of the banks at this time right now are offering more incentives on longer rate terms such as 3, 4, and 5 years, and of course keeping their short-term rates around the 1 and 2 years much higher. A big reason for that is because most predictions suggest that the Bank of Canada and the bond yield market, which impacts fixed rates, is going to come down over the course of the next 12 to 24 months. Which means in many situations, it's actually more beneficial for a borrower to consider a short-term mortgage if they can sustain it and they know they can qualify at the end of that period of time. Now, a couple other thoughts. If you have a variable rate mortgage and you're struggling because of high interest or you have other debt starting to accumulate, instead of just running to the bank and locking in, you should consider your different options. The first option, of course, is locking in. And if you're even thinking about it, make sure to get a quote from your bank and then talk to us, because we can discuss different lenders that might be offering better options. Well, the second consideration is that whether you're coming up for renewal or you're thinking about making a change into a fixed rate loan, you have the ability at this time to look at consolidating all of your debts together into a single payment and re-amortizing your loan. What this can do for you is it can extend your payments, yes, and reduce these overall debts, which can help you to overcome these obstacles during this time. As we see interest rates start to come down, you can look at, of course, increasing your payments to get your amortization schedule back on track. But as runners like to say, don't try to run up the hill, walk up the hill, such as when rates are high, and run down, meaning when interest rates start to come down, look at increasing your payment and reducing your amortization. Some other interesting developments that we're seeing in this current marketplace is that the Canadian real estate market is really starting to heat back up. With month-over-month sales prices starting to actually increase, we are seeing that people are getting confident about getting into the market. And there's a variety of reasons for that. Interest rates have stopped going up. In fact, in some cases, they're going down. We are seeing more people transfer more family money, and others are just realizing that they want to own a home and they're not going to wait forever. So if you're someone who's waiting for the bottom, it's very possible that you might have missed it. But the good news is that the actual cost of real estate is still on the lower end of the scale, especially when compared to 2022. Now, if you're considering refinancing, renewing, looking at your overall mortgage scope, or buying another property, we'd like to be the team that would help you out. Make sure to send us a message, and we look forward to talking to you very soon. Now, if you found this video informative and you're thinking about making a change to your mortgage, refinance, renewal, or purchasing a property, make sure to like, subscribe, but also reach out to us so we can provide you a one-on-one consultation. I'll see you on the next video.